A powerful surge across Asian bourses signals a new era of global economic confidence, reshaping investment landscapes for many worldwide. Asian markets are making headlines this week, with South Korea's benchmark Kospi index surging to an unprecedented record high of 5,662.24 points on Thursday. This significant jump, which saw the index climb 2.82%, reflects a powerful momentum building across the region. It marks the first time the Kospi has breached the 5,600-point mark, indicating robust confidence. This milestone for Asian equities signifies a broader regional rally buoyed by optimistic sentiment stemming from Wall Street and strong performance in key sectors. For global investors, this surge is a clear indicator of growing economic dynamism and potential investment opportunities within Asia. This latest peak didn't happen overnight. The Kospi has been on a remarkable trajectory, reaching a prior record closing high of 5,522.27 just last week on February 12th. Over the past year, the index has demonstrated exceptional growth, soaring by more than 106%. This sustained upward movement follows a period of significant recovery and investor reassessment of Asian economies. Back in November 2025, analysts at Fidelity were already highlighting Asia's critical position in the semiconductor supply chain and expected strong performance in Korean and Taiwanese chipmakers for 2026. This long-term outlook, combined with recent market optimism, has paved the way for these record-breaking figures. Several powerful forces are converging to fuel this Asian market rally. A primary catalyst is the booming semiconductor industry and surging demand for artificial intelligence. Major Korean tech giants, including Samsung Electronics and SK Hynix, are at the forefront, experiencing significant share price jumps. Optimism around the global chip cycle is driving substantial investment. Furthermore, positive cues from Wall Street, with U.S. technology stocks showing a strong rebound, have set a constructive tone. Lastly, South Korea's own economic fundamentals play a crucial role. The IMF now forecasts South Korea's economic growth at 1.9% for 2026, a revision upwards. This positive outlook, coupled with an expansionary fiscal policy focusing on AI investment and economic support, underpins the market's strength. This Asian market surge carries significant implications for global investors. Firstly, it signals a strong return of investor confidence in the region, offering attractive diversification opportunities beyond traditional Western markets. Asian technology companies, in particular, are viewed as offering superior value and higher growth potential due to lower earnings multiples compared to their U.S. counterparts. This rally also underscores Asia's pivotal role in the global technology supply chain, especially with the ongoing AI revolution. However, foreign investors were net sellers of Korean shares on February 19th, despite the rally. Additionally, while the momentum is strong, concerns over exchange rate volatility and broader trade uncertainties persist. Geopolitical tensions, such as those involving the U.S. and Iran, also present potential headwinds that global investors must consider. Analysts are largely optimistic about the continued trajectory of Asian markets. Goldman Sachs, for instance, maintains an overweight rating on the Kospi, raising their target to 6,400 points, which implies over 20% upside from current levels. This bullish stance is attributed to exceptionally strong aggregate earnings growth, projected at 120% for 2026, alongside attractive valuations. However, experts are also closely monitoring several factors. The diminishing expectations for Federal Reserve rate cuts in the U.S. could influence currency markets across Asia. Investors will also be watching upcoming inflation data and Federal Reserve commentary for signals on future monetary policy, which remains a critical driver for broader global sentiment. The impressive performance of Asian markets, particularly the Kospi, underscores a fundamental shift in global economic power. As these economies continue to mature and innovate, especially in high-growth sectors like technology and AI, they offer increasingly compelling investment narratives. Diversifying into these markets could provide significant long-term growth potential for many. The ongoing interplay between regional strength and global economic conditions will define the path forward, requiring investors to remain agile and informed. The focus will be on sustained earnings, technological advancements, and responsive monetary policies across the globe. This is GeeseFinance.